So we had a very strong initial downwards move to start off last week, specifically on Tuesday and Wednesday. And you remember from the Wednesday video, I did expect there to be some form of a pause around this range slash bounce, specifically at the 4,050 level. However, this bounce went a lot further than expected. We ended up closing back above the pennant, which is pretty incredible to think about. This pennant here, this is the two red lines. We have this top of the pennant here being the resistance, which actually was broken through on not only a daily candle, but also the weekly candle. And I'll go back to that in a second. But also we have the support down here. And as you can see, we did have a pullback as expected over here. However, the bounce ended up going very, very high, much higher than I personally had expected, especially for last week. So this does bring in additional scenarios for this week specifically because we do have not only FOMC approaching on Wednesday, but also I have a key turn date on Wednesday as well. I mentioned this one in the Wednesday video, but I do have a reversal date on May 3rd. This is the part of the 18-day cycle. If you remember this cycle from previous videos and how my cycles work, basically whatever the momentum is going into this specific date. For example, this March 13th date was one of them. This momentum we had was going down into this date. And of course, if the momentum is down into the specific reversal date, then you will see the opposite force afterwards, or at least it's highly probable that that will be the case. And in this case, this is exactly what happened. We had momentum to the downside on this exact date. It prompted an upside reversal, and we continued after that. A similar thing over here for this February 14th date. We had upward momentum into this date, which is followed by downside following. And you can see just every single one of these has prompted a form of a reversal following. It does have a plus or minus 1 day, I would say, an error for it. So you could give it one more day for things to pan out. But all things considered, it's been very successful, especially over the course of the past year plus throughout this bear market. So we do have a critical date coming up here on May 3rd, which just so happens to be FOMC. So I'm going to be watching price action leading up until FOMC very closely. But going back to SPX's chart over here, you can see, again, we did break out of this resistance here, specifically within the pennant pattern. We also broke above the 4,156 pivot level that I had previously and had mentioned in other videos. So this is most definitely a form of a breakout, especially after this downside was negated. Although I have to mention there are a few, I guess you can call it, problems with the breakout that we're looking at right now. One of which is we still have yet to crack above the high from the February 2nd level. So that's one thing. This high was just about at the 4,200 level. We haven't had a decisive break, but not only a decisive break, we haven't had a decisive hold above, because there still is potential, especially with how bullish last week's candle looks. There is a potential to retest around this 4,200 level coming up here soon. However, failure to maintain above would likely give bears the reins again to try and take this for another pullback and crack at the pennant level, which would be roughly around the 4,120 to 4,130-ish level for a retest. It would be their goal to have a break back below, making this a fake breakout. We will have to see what happens by then. But another problem along with this is if you actually look at the VIX over here, you can see we did actually break below this key trend line, this yellow one over here. This is a trend line that goes all the way back to 2017. It is a little bit more difficult to chart the VIX, so you do need to see extra confirmation to make sure that a break is valid. So for example, here we had a weekly close below, which typically is sufficient for an individual ticker or even an index. However, for the VIX, you want to see a confirmation, especially for another week, specifically because we do have FOMC this week that could bring possible volatility as well. But the weekly close for this week is going to be very crucial, especially if it closes again under this level. That could mean more vol compression in the future, but there is still potential for bears at least to get volatility back up above this key trend line here. This is the first break since 2017, so very crucial that we did break below this. Also is very odd that we broke below this. There's been a lot of volatility compression ever since October so far. We did have a spike over here in March due to the Silicon Valley Bank issues that were present, but very weird to see that basically fear has been completely eliminated from the market. We were at a lower level in the VIX, being in the 15s. We're at a lower level than we were at all-time highs on SPX from all the way back here in this January-ish time period. So one of the problems, like I just mentioned, for SPX in terms of the breakout will be the fact that the VIX is so subdued right now. Being in the 15s, the risk to reward is not to the upside on SPX, at least at the current level. Volatility is way too far down right now to make a sufficient long long opportunity on the breakout of the S&P 500. And also, again, just like I said, S&P 500 is at 4,169 based on the close for Friday, yet we were at 4,800 on SPX all the way back here, right around the 16 to 17 level for the VIX. So we are at a lower level right now, yet we're not even over 4,200 on SPX. So some very weird market dynamics occurring right now. Again, the basic premise of this, specifically because we did see that breakout here on SPX, despite having a breakout of this pennant so far being confirmed on the weekly, you need to be very careful, specifically with FOMC approaching on Wednesday, as well as volatility being this subdued. Again, very rare to see, especially with volatility being this subdued. So we're kind of in a weird position right now where we did see this technical breakout. Again, technicals are showing this as a clean breakout, which would typically warrant further upside. However, we have a major event this week being FOMC. We have a turn date this week. So there's potential if we chop or go slightly up into Wednesday, there's potential for a reversal off of that turn date. So it's another thing to note. And then also the VIX is just super low right now. So in terms of long positioning, the risk to reward is just not favorable to the upside. So by Wednesday, the market will give us a little bit of a better sense on where things can go, specifically because of that turn date and FOMC being on the same day. But one thing I do want to note as well in terms of the dark pool levels is we actually saw quite a bit of premium last week. And I do want to go to the start of the week because I did mention this in the Wednesday video. We saw a very large $2.8 billion print at the 412.18 level, and then also another very large print here on Tuesday for $3.7 billion at the 412.55 level. So in the 412 range, there is a lot of premium. Remember, guys, having something over $2 billion is quite a bit. Something over $3 billion is pretty excessive. That's very rare, especially within the market that we've seen in the past half year or so. It's fairly rare to see something over $3 billion in premium, so definitely noticeable. And it was interesting to see that we had a sell-off, as you can see on this graphic up here. We had a sell-off following these prints to the downside. And eventually we ended up reversing and negating this previous sell-off. However, a lot of these prints up here, I find it very unlikely that these were forms of buys. And despite the large rally we saw to end last week, part of the reason why I believe this is a form of distribution and selling in the dark pools, or at least some of the reasons why, is if we go back here to SPY just for a visual understanding, we saw a lot of those prints over here in this potential distribution phase on the S&P 500. And if you go to the 15-minute chart, you can see this is a very similar distribution pattern that we've seen in the past, where we see a gap down like so over here, followed by an uptrend, followed by a further downside, again an uptrend like slow grind up, downtrend over here, slow grind up, and then a downtrend after that. I mentioned this in the last video. We saw a very similar kind of distribution pattern here back in February before the sell-off. So this is a common form of distribution, and yes, we did see a very strong rally to end last week, but when those prints hit the tape, that was around the highs of these days over here. You can see back on Monday as well as Friday, because remember, signature dark pool prints are delayed by 24 hours. So Friday and Monday, we saw a distribution pattern here, and then two very, very large prints hit the tape in terms of the dark pools, followed by a large sell-off after. Typically, this is indicative of a large sell via the dark pools, and that's still my assumption that we did see a large sell over here. Very unlikely, especially within this distribution pattern, especially being followed by a large sell-off, very unlikely that an institution was buying specifically that much in terms of premium around these levels. It's just my opinion on it. What we're most likely seeing is selling on the way up, a possible distribution as we continue to the upside here. It's pretty characteristic for at least institutions to load near the bottoms, and that's actually what we saw over here. If I go just to the hourly chart, we saw a lot of large dark pool prints, even a 5 billion plus one, all the way around the retest of that major downward trend line that I've showed you guys in previous videos, the one that connects all the way to all-time highs on SPY. We saw a lot of accumulation over here. I was talking about it being potential accumulation. That did end up being the case, and now we've had a subsequent rally afterwards all the way to the upside, and now we're starting to see potentially the same institutions offload those shares as we continue up. So there's still potential for further upside within this range. However, this is a sign that they are offloading on the way up. They're taking their risk off the table after loading around this range. Again, I don't know with 100% certainty it's the same institution that loaded around here, but at least it seems that this is a form of distribution en route on the way up. We saw a lot of that pressure hit the open markets the following day with this downtrend afterwards. We did have the big rally again to end the week. However, this is a sign of weakness as we continue up, and more of these prints are a telling sign of potential downside to come. So do continue to watch the dark pools. Again, I still believe this is a form of distribution within this range. And if we see more of them, that will lead to a lot more weight on the market. One last thing I want to note in today's video is Apple. So far, this is a very clean breakout of the downward trend. We saw an initial rejection around this downward trend line, but so far we've had a clean retest, as you can see over here, and then a very big bounce afterwards. Now we do have earnings approaching, as you can see here, on Thursday, and we actually wrote an article that you can find in the description below about some trading strategies for that earnings report. So you can check that article after this video if you choose. But basically, Apple is in a bullish breakout formation so far. That doesn't mean that it can't tank, though. After earnings, we've seen some pretty substantial earnings moves, mostly to the upside so far throughout big tech, but that could potentially be priced in already for Apple. So we'll see what happens. But so far, this trend line right here is everything for Apple. A break back below in the future would mean a lot more downside, making all of this a fake breakout. But so far, it's been able to test it, or at least retest it, and it's been able to bounce off of it, which shows a lot of strength. So we'll see what earnings brings. I am definitely going to be watching for that on earnings day on Thursday, especially because I do have that reversal date on Wednesday. So we have a lot coming up. We have FOMC, that reversal date on Wednesday, and then also earnings for Apple on Thursday. So a lot to talk about throughout this week. We'll see how this week starts off, and I will let you guys know how the reversal structure for SPY looks come Wednesday.